All right, scholars, we're now going to take a look at subsequent events. And remember, there are two distinct types, recognizable and non-recognizable. Understand recognizable means journal entry, debit and credit, because it relates back to information that was in effect at December 31st, assuming a year end of that. And therefore, this gives clarity. On the other hand, a non-recognizable doesn't mean you close your eyes and you don't even mention it. It just means it's probably a footnote disclosure because it's information that readers would want to know, even though it doesn't relate back to December 31st. So we're going to look at the auditor's responsibility. You probably recall that's the prime test that we do. And we'll look at what happens if you discover these facts after the issuance of the auditor's report and how do you do a notification. So let's take a look and make sure you're comfortable with this. We're auditing the balance sheet of Creative CPA Clothing, and they're going to have their year end December 31st, year 2. We're going to stay there and audit all the way up through the 15th of February. That's going to be the date of the auditor's report, and 2 days later, we're issuing the financials. Now, you'll note right here that we recognize, and I'll point this out right here, we recognize subsequent events that exist for information that existed on or before the balance sheet date. And you have a required debit and credit adjustment and, of course, a disclosure. If, however, something comes up, but it relates to after year end, but it's important, like we bought another company in January or early February, there was an earthquake and it ruined one of our buildings, we sold a business and it was material, etc., then we would not journalize it, but we would record it as a footnote. So during the period of December 31st, all the way through the date of our audit report, we are now going to take a look at our prime test. And to recall those were a post-balance sheet review, get a rep letter and make sure the management promises to have told us and vouches for that, everything that's happened. We make inquiries of legal counsel, we read the minutes, and we examine the latest financial statements for each month, the month of January, etc. Those are your prime tests that we would perform. Now, note also the difference between the period of the 15th of February to the 17th. An example would be as if you found something in that period, you could dual date it at that point in time. Or the auditor, by the way, in this next period, while you have no active responsibility to investigate it, if information comes to your attention, then the auditor should consider whether it's necessary to adjust the financials with a debit and credit or just a simple disclosure. If so, the auditor may elect to dual date that report. And you can see how that example would look. Next, we want to add the following information. I'm going to point up here. What happens if when we issue the financials right here, what about after issuing them? So this is subsequent events that occurred even after that period. Upon discovery, after issuing of the report, that's what we're talking about now with that new top bracket, information confirmed by the auditor that materially affects the report and other persons' reliance on it, the auditor should advise the client to disclose the new information and the impact on the financials. This may result in the auditor revising his or her report, and a dual dating of the revised report may become necessary. So that's part of the next aspect that has to be done. What about subsequent discovery of facts after issuance of the financials? Well, in this particular case, you'll notice that we had an IPO for Skilled Healthcare Group, and that was done back in May of 2007. The auditor issued a report for the period ending December 31st. The auditor's report was issued for the year end, and that was done on, wow, look at this, February 29th. Ooh, leap year. The next year, we have another audit opinion, and the audit report was issued as of February 24th. Now, in June of the next year, we discover a material misstatement going all the way back in time, and it relates to all the years, including the years that would be in comparative format with the new material. So, in this particular case, we're going to have to sit there and say, we have some opinions that may need to be adjusted. Let's take a look here. First of all, we have to notify our readers and investors. And you'll notice I'm going to highlight the most important parts. Investors should no longer rely on the company's financial statements, all right? nor the reports of the accounting firm. You'll note also a change or a charge against after-tax earnings in the aggregate amount of between X million and X million will ultimately have to apply. And finally, the company will file its restated financials with the Securities Exchange Commission as soon as practicable. So now we're notifying people. You'll notice at this point in time, we're going to sit back and we're going to say, all right, we discovered the material misstatement. We've notified people. Now what's the obligation? Well, moving on, we have the restated financials are issued with revised auditor's report at this point in time. And of course, the error has been corrected. So we can still issue an unqualified opinion, but we're going to have to mention this information. So the revised auditor's report would include the following information. And you'll notice, in our opinion, the financial statements referred to above present fairly in all material respects. You'll notice that. But I want to point something out. It says, as discussed in Note 2, the accompanying consolidated statements have been restated for the correction of an error in the company's calculations of its allowance for doubtful accounts. We ultimately gave the address. We gave the new date, except for certain items which are dual dated. So we had the original date of the original audit, except for the dual dating on the newest item, which related to footnote number 2. So that gives you an idea of how you would correct at that point in time and change it.